Hi, I'm Mike Litton, and this is your market update. We have new numbers out from year over year from last month, and new listings were up 18.7% year over year, right? But they were up 0.8% the month before year over year. So new listings came out of the chute blaring, like blasting, unbelievable. So that's the first one. The second one is closed sales were up 5.8% versus being down 10.9%. So the market has turned around, and I'm going to show you in a minute why, but the market has turned around. So at least in terms of these numbers, median home sale price is up 15.8%, you guys, to 1.1 million. Median home price in San Diego County is up 15.8% to 1.1 million. I'll show you why in a minute. It has to do with interest rates, and it has to do with what we talked about last time when we talked about the fact that the Fed had made the decision they made about the balance sheet. So next is the average sales price. Average sales price is up 11.6% or 11.9%, pardon me, to 1476351. Can't quite see that. I apologize. Let me move that way. Here we go. Okay. Next is percentage of price received. So if you had $1 million listing, and we just closed one last week at $1.1 million, but if you had $1 million listing, you ended up to 1.2%. You ended up with an offer average of $1,080,000. Not bad, huh? Next is housing affordability index was down 20%, you guys. Now, part of that it has to do with affordability in terms of prices going up. So you saw how median home prices were going up, and you saw how activity was up. Part of that is affects affordability, and it also affects affordability from interest rates before. Next is going to be monthly supply. Monthly supply was up 38.5%. If you remember last week, new listings were up 189%, you guys, in 1 week. Those were the weekly stats. They were up 189%. We're going to show you a major shift that happened this last week that I wanted to bring to your attention. So we're going to see that here in just a second. So next this is that 50-year chart. So over here, this is that peak back in the early 1980s, right? This is that 50-year average. This is the average for the last year in terms of interest rates. Now, look at this. We're at 7.16% as of Friday. Look at the graph. Look at what's happened. This is where the Federal Open Market Committee met. If you remember, we talked about the balance sheet, and we talked about how it will affect the long term of the market. We're talking about a little bit more here in a minute. But see how that's dove off? Did you see the decline? That's exactly what we called. We exactly talked about that last week, and I told you that this was going to happen, in all deference to CNN, right? Okay, so here's the weekly stats. Look at this, you guys. This is incredible. So we're currently at 3,908 homes on the market, which is up 3.85%. Look at the number of new listings, 234 versus 1,651 last week, down 142%. But remember, like we talked about last week, it was up 189%. So there was a major correction back to that 142 number, or down 142. And then pendings were up 3.7. So you've got more homes on the market, up 3.85%. You've got new listings way down from what they were last week. Now remember, this is the time, if you're going to sell your home, right now is the time to do it, because families who are the biggest consumers of real estate, the biggest chunk, largest demographic, if you will, they are currently finishing up the school year. School year finishes here in San Diego County at the end of this month and right at the beginning of June. So, the end of this month to June 15th. What they're looking to do is they're looking to buy now. They're looking to close after school's out, and they're looking to move in. They're looking to go on vacation in July. Usually in July, I've been doing this for 32 years. In July, everything kind of calms down because we don't get a lot of calls because a lot of people are on vacation. They're on vacation because they're going back to school in August. Or beginning of September, right? And so they got to get back, they got to get registered, they got to get back in do the back to school thing, the whole thing. So July is the vacation time. So right now is the perfect time to put your house on the market. So if you have questions, give me a call. I'm happy to talk with you. There's no obligation, no cost or any of that. And I'll answer any questions that you have. There are no questions that you cannot ask. Okay? Next is consumer sentiment. Now look at these numbers, you guys. This is the current number. This is the current number, down 12.7%. This current conditions, down 12.9%, down 12.5%. Now, year over year, we're up 20.7 in expectations. That's not bad. Up 5.7 in conditions. The index is up 14.2%. Here's the deal. That's not good news for the Biden administration because they currently are in charge of the economy, and all of those being down currently, that's not a good thing. And if you remember a couple of months ago, we shot out of the cannon a major positive report where there were positive, we're talking some of the highest in decades for that third number, right? That in history. So just remember, this is something that's not good. This is not the best you could possibly see if you're the Biden administration, you're trying to get reelected. So something to think about in terms of consumer sentiment. And remember, consumers have to be confident in order to buy homes, right? And especially when interest rates are 7% plus. And by the way, 30-year fixed rates in San Diego County are in the high sixes. So they're not exactly 7.16%. So the Fed, if you remember, we talked about the Fed and their balance sheet. The Fed decided to pare or slow down the reduction of their balance sheet. Remember, if they accelerate the balance of the balance sheet, if they increase it, it actually drives down interest rates because it drives up the price of bonds. Here's the thing. They chose last time, a couple of weeks ago, during their Fed meeting, they chose, and that was where a peak that you saw where it started to go down. They chose to slow down what they call quantitative tightening, which is the draining of that balance sheet. If you guys aren't sure about that or you have questions, just give me a call. I'll be happy to walk you through it. It's a little bit in the weeds, but the basic takeaway from this is it will put downward pressure on interest rates. So interest rates will, in fact, start, as you're seeing, will start to come down because bond traders see this as a positive and they believe bonds will continue to go up because of that pressure of the balance sheet. I hope that helps. So something to look forward to. This is that CNN article. This is what the balance sheet currently looks like. This is where it is right now, 7.55 trillion. And they are currently draining it at a pace of 25 billion per month versus 60 billion per month. So more than half of the draining or the liquidating of the balance sheet, less than half was approved a couple of weeks ago. So you're going to see, we believe, a gentle, just like you're seeing, a gentle reduction in the long side of the market. Remember, 15, 20, and 30-year fixed rates are 87% of the loan type chosen for purchases. So 87%, that's a big deal. And remember, 74% of this nation's net worth is real estate. So you take care of the real estate, you take care of the economy. If you're the Biden administration, you're trying to get reelected, you want to take care of the economy and specifically real estate. This is our listing at 1194 Berry Place. If you want more information on it, it's 1194berryplace.com. We've been on the market a couple of weeks now. We just got an offer last night. If you're interested in this property, call me right now because you have a chance to put an offer in right now, but your window is closing rapidly because tomorrow we're going to be countering that other offer. So if you would like if you like this property and you're interested in it, put in an offer subject to seeing it, and let's get this thing rolling. So any questions about that? This thing's like a show place. Look at this. I mean, this is gorgeous, right? Sorry, I'm having to step in front. This place is absolutely a show place like you saw before. So, okay. All right. The Mike Litton Experience, the podcast. Thank you for all of your support. The Mike Litton Experience podcast just surpassed 230,000 listens, you guys. 231,000, in fact. Our YouTube channel is Mike Litton 3375. I'm at Litton Realty on Twitter, Instagram, TikTok, Facebook. You're more than welcome to follow me. Love to have you. And if you want to meet with me, it's calendly.com/REO760. Calendly.com/760. I thoroughly enjoy doing this, and I hope these market updates help you. I hope you have an amazing week, and we'll see you next week.